Keep away from people who try to belittle your ambitions. Small people always want to do that, but the really great make you feel that you too can become great. Mark Twain. And Samuel Clemens, aka Mark Twain, never spoke more words of truth. You can do this. We want you to know that greatness is in your grasp. You can read these stock charts. You can have what you want. 10 to 15 minutes a day, that is all we ask, but you got to do it every day, my friends. You will not learn the nuances if you don't do it. Here's something to cheer you up. On the screen, I did this yesterday, spent a whole bunch of time. I talked about it on yesterday's program. Weekly vertical crossover potential profits through the 17th of April. I want you to see the numbers here. We had the up movement at the beginning of the year in SPY. It started on the 3rd of January. Now, it had already actually started. We just went ahead and glommed on it there. We had already had the weekly vertical crossover, but just following its movement, its trajectory, it on that date was $324.89. Hit its high of $339. That was 4.37% of potential profit, $14.19 a share for your practice trading. Then, of course, the huge down movement. We saw that weekly vertical crossover on the 28th of February at $307.71. That wasn't capturing everything. That was where the crossover occurred. That jumping in point on Friday afternoon down all the way to $218.26, 29% potential profit. Now again, not saying you're going to capture all that, but I just want you to see how much is there in these moves. Whenever I hear people say or they write in the comments, well, this doesn't get us in at the very beginning. Of course it doesn't. We're trend followers. We have to have trends to follow. We look at QQQ, same kind of thing, 9.86%. That was just in the up movement until we had the bottom. 22.38% was where the from the crossover to the total cratering of the NASDAQ 100. What about bonds? Crossover on the 31st of January up, look at that, 24% where it reached its top back on the 13th of March. Amazing, amazing. And then we look at gold, up, down, up. We see on gold 8%, 9.68%, and 5%. Again, my friends, none of our weekly vertical crossovers so far this year have failed us. We had one, I believe, recorded last year. I think one. But again, that's the magic of the weekly vertical crossover that we talk about all the time. Now, let's talk about what's going on in these charts. We see stocks up for the day, bonds and gold down, which is what we want to see. We want to see the market moving one direction, bonds and gold the other. It shows us a little bit more health in things. We see that stocks finished the week up on the S&P 500. Still negative, don't have a crossover, derivative oscillator losing downward momentum. Go to the 2-day chart. What do we see there? We see things just continuing to plod along. Price percent oscillator heading up, derivative oscillator still heading up. It's getting slower in its up movement. Now, do have a special training for you today about our master indicator, the price percent oscillator, which gives us these weekly vertical crossovers and 2-day recrosses. So again, want you to understand that. Those of you who subscribe, you'll see it in your show notes. If you're not a subscriber, you don't get all the special trainings we put out. You can get it, though, for free at chartingwealth.com. Just go sign up. There we go. That's where we are on the 2-day chart. What do we see on the 4-hour chart? Well, price is above the 4-hour trend line. We need to draw that a little better. That's about as good as I'm going to get. Price is above the 4-hour, above the 2-day. And look at what we saw happening. Trying to cross over going down, but bounced off on that 4-hour chart. We saw it had gone into the red on the derivative oscillator, but bounced over, moving up and away. How high will it go? As we've talked about with the bull trap, probably somewhere between 2/3 to 3/4 of what it lost. If you haven't taken our Corona investing training, I'm going to put it at the end of today's video for those who watch us on YouTube or who get our emails. That's where it takes you when you watch the video. And for those of you who are listening to us on iTunes, you can find Corona Investing at the website chartingwealth.com. So I want to make sure everybody has that. Now we're going to leave the S&P 500. Again, just continue to watch. Hey, there could be a crossover in the coming weeks. Don't know that that's going to occur. There's just so much bad stuff happening out there, and I know people are perturbed that we see the market just go up and up and up. How can it do that? Folks, the market will do what the market will do. That's why we trend follow. We don't try to second guess it. We follow the established trend. It leads us. Now, let's go to the Qs. Getting closer. We see the price percent oscillator heading up, still negative. Still means it's negative. Still have a down arrow. Haven't had a crossover. Now we see that the derivative oscillator losing momentum, price percent oscillator negative, but heading up. Nice big up week in the market, second in a row on the NASDAQ 100, up for the day, 0.96%. By the way, the S&P 500 up 2.70%. And look at that stair step, fairly decent up movement as we have moved along. Derivative oscillator heading up, price percent oscillator heading up on the 2-day chart. And then we see, and I had someone ask me an interesting question I didn't quite follow the other day. They had asked me if the charts, was it just the candles that were reflecting the time periods I'm talking about, and then what did the charts reflect? I didn't quite understand that. The charts and the candles reflect the same thing. All of the indicators on this 4-hour chart are 4-hour indicators, including the price percent oscillator, the derivative oscillator, the candlesticks, the 2-day trend, which I do differentiate from the other trends. We do map all those, but everything else besides the trend lines and the crossovers that are colored to let you know what time frame they fall in, each is exclusive to its own chart, so don't get confused. Now this 4-hour chart, we see price movement up in the morning, a little bit of a pullback in the afternoon, price well above the 2-day. Derivative oscillator losing momentum, price percent oscillator about flat. How much higher will this market go? Can't tell you, my friends. I just don't know. Might see a little bit of a ceiling there at 220 if it continues to go up. But we'll wait. We'll see. We'll let the market lead us, show us what's happening. Remember, we trend follow. Now, we're going to leave stocks, go to bonds. What do we see there? Bonds down for the day 1.34%. What do we see here? Well, we see the price percent oscillator about flat, derivative oscillator continuing to lose momentum. Green spinning top for the week. Not a whole lot of power pushing that up, sitting right there on the weekly trend line, really backed off on us on TLT on Friday, 1.34% down. Go to, oops, not the 4-hour chart yet, 2-day chart. What do we see there? Well, we see that 2-day candle, again, pushing up. It lost some energy. It was up, of course, on Thursday, down on Friday. And we see the derivative oscillator continuing to lose downward momentum, but just not enough to cross over that 2-day. Perhaps that could happen over this next week if stocks particularly start struggling, and we'll be watching for that. And of course, we saw up in the morning, down in the afternoon on bonds. So we'll continue to pay close attention to what's going on and just see what's happening. The main thing we're going to look for this next week is whether or not we have a crossover going up on that 2-day chart. Extremely important. Put that in your show notes. Might give you an opportunity for a 2-day recross and an up buy that you could actually do in your virtual trading. Now, lastly, on the main review, we're going to go to gold. Gold down 1.94%, really taking it on the day. Now, we still see a nice green up candle. Price percent oscillator still heading up. Lost a little bit of energy there on Friday. Derivative oscillators, we talked about the whole time, still negative. It's losing downward momentum, but it's still negative. We go from the weekly to the 2-day. What do we see there? Well, we see things sitting right there trying to push through that 2-day trend line. Price percent oscillator has just gone dog flat, And the derivative oscillator is still positive, but lost some momentum. Means indecision tending down, lots of indecision, almost a doji there. And we look at the 4-hour chart. What do we see there? Strong movement down in the morning, followed by more down movement in the afternoon after a sideways slide. We've talked about this for the last day or so, telling you who jumped into that trade back on that weekly vertical crossover to pay close attention as to whether or not we were just digesting gains, getting ready to move up, or was losing momentum and headed down. We can see what happened on Friday, pushing through that 2-day trend line on the 4-hour chart. Those are various warning bells. So again, pay attention. Keep looking first and foremost at your weekly chart and, of course, your 2-day, which has gone flat on you and trying to push through that 2-day trend line. If that's sustained and you're not out at this point, didn't take your profit back when things peaked, pay close attention. Maybe you sold half your position in your practice trade. Whichever you did, continue to pay attention to gold. Not over yet necessarily, but watch it like a hawk. Folks, that's where we are as we end our review of our main 4 ETFs. You guys have been asking and I've been giving, going over both oil, Bitcoin, and real estate. We'll do that. Those of you who don't care for this, you may go now. Thank you so much for being with us. Hope that you've recorded all this on your weekly market worksheet and you'll be ready to use what we've talked about over the course of this next week. Thank you so much. Hadn't purchased our book, please do so. See the link in the show notes. You live overseas and want it, all you have to do is email us, cw@chartingwealth.com. Send you a PayPal invoice. Everybody else use the Square page we have a link to in the show notes to buy the book, Charting Your Way to Wealth. Now, let's go to oil. Boy, oil down again. And look at how low when it went below the prior low, $3.96. Boom. Wow. Continuing to move down strongly. Price percent oscillator heading down. Derivative oscillator losing some downward momentum. That's from those 2 days of a sideways slide and a slowdown in the down movement. We see on the 2-day chart, we saw how things tried to move up and then slipping over, going down. So again, going below the prior low. Oil is just getting hammered. And when we look at the 4-hour chart, we can see how it just, again, down in the morning, further down in the afternoon. Oil is just having a really hard time. It tried to pop up and then just sort of lost it. How low can it go? When is it a buy? I'm not an oil person. I can't tell you that. We can sure watch for when it recovers. If you want to be a bottom feeder, that's not really what we do here. We look for established trends and follow them. But it's awfully darn low. Going from a high over the course of this last year, oh my word. Well, I guess the high that oil reached somewhere in the neighborhood of $13.09 all the way down to $3.96 today. Wow, that is just hammered down. Saw gas prices here in the area where I am right now, $1.34 at one station. I hadn't seen that since probably the 70s. Okay, now let's move on. We will go to Bitcoin. What Bitcoin do? 0.23%. Okay, that's 0.23, not 23%, 0.23%, not 2.3%, 0.23%. Hardly up. How did we end the week? Well, we see the price percent oscillator heading down, derivative oscillator negative. Red spinning top means indecision tending down on Bitcoin. It has gotten crushed. Trying to move up on the 2-day chart, not really doing a whole lot. Price percent oscillators pulling away. Derivative oscillators gaining some momentum, but a little bitty green candle there. We see on the 4-hour chart, when we go to Bitcoin, up in the morning, a little further up in the afternoon, or about the same really. Maybe having a crossover going up on that 4-hour chart. We'll just continue to watch, see what there is to see there. Bitcoin struggling to recover after those massive losses. Somewhere from a high of $10,323 back in February to a low of $5,118.94. Boom. And again, not recovered much from that. Lastly, we go to real estate, up a little bit for the day, 3.16%. These are REITs, commercial real estate investment trusts. It just gives us some idea as to how real estate is reeling from the coronavirus. And again, more and more that's going to kick in as people can't pay their rents. How much help is going to be given to the banks and the mortgagors? Again, just going to be interesting to watch how that goes. Have we really lost 25% of our value or more? Who knows? Could be more. What do we see going on as far as the price percent oscillator? It's about flat. Derivative oscillator losing downward momentum. Did reach its high back on the week ending the 9th of April. That was last Thursday. Markets were closed for Good Friday. Popped up to a high of $79.99. This week, a high of $78.61. So it didn't reach that prior high. Again, still negative on the weekly chart. We go to the 2-day chart. It did cross over back on the 9th and really has it popped up back on that 2-day candle representing the 8th, Wednesday, and the 9th of April. And then it's just sort of slid sideways, losing a little bit of its momentum as far as we see on the candlesticks. Price percent oscillator still going up. Derivative oscillators lost a little bit of momentum. Go to the 4-hour chart. What do we see there? It's still negative. So had those 2 big days of down movement on Wednesday and Thursday. A little bit of recovery on Friday. So again, real estate struggling, Bitcoin struggling, oil just getting hammered. So again, that's where we are, my friends. Thank you so much. You hadn't purchased our book. We'd love you to have a copy if you want to support us at Patreon because you care about what we do and would like to help underwrite us. A lot of great benefits for you there. Lowest level is that $30 a month level. If you support us at the $100 a month level, you get a free book. And of course, everyone joins in the monthly question and answer live call-in training. We appreciate you guys. We know you appreciate us. You say so many nice things about us. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Stay well.